What's going on, everyone? My name is Nicholas Merton here from Data and today is January 13th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we got to spend some time to talk about the brutal reality of Bitcoin's price action. Day by day, week by week, we are seeing more signs when it comes to price action, when it comes to inflows and outflows from MicroStrategy and the Bitcoin ETFs, that there are growing signs of weakness in Bitcoin, but also in the broader altcoin market and even in US stocks. I want to do a full analysis here so you guys have a full overview. I know you guys don't always get to check out every one of my videos, but if there is one you're going to watch, I would definitely recommend you guys watch this one. I think it'll prep you well for the next month or so. And again, if you guys enjoy this video, as always, consider dropping a like. It's a great way to support the channel. Grab a cup of coffee. Let's go ahead and kick off the analysis. So I want to start here by talking about price action, because already it is growingly obvious here that there are a lot of negative signs here within price. I'm not just trying to be a Debbie Downer here. I'm trying to be realistic with you guys, because there's been a big change since back in November. Throughout October and November, we essentially had the 21-day moving average serving as our bid side support here at higher price ranges, providing that cushion of support for price in order to maintain an uptrend and make higher lows and higher highs. That is why we saw the acceleration we saw back here. And that's, again, as you can see even here in December, when things started to go more sideways, every single time we came to the 21-day, buyers came in and drove prices to its new all-time high around $108,000. That has started to change in a big way, because we've not only set in a new relative lower high here, which is already indicative of weakness in price, but beyond that, the 21-day moving average is clearly acting as resistance here multiple times. And the one attempt that we had to get above it had a bearish engulfing candle, completely fading those gains, showing that there's much more distribution or sell side pressure, eager to get out of the market, versus those who are willing to get in and provide that bid side support. We weren't able to hold on the 21-day moving average, and that is a really bad sign from price action. I'm not saying it's the end of the world for Bitcoin. I'm just saying it is pointing us in the direction of a healthy, moderate correction. And unless we get above that 21-day, unless something really gives here soon, then we're much more likely to come down here to the 100-day moving average, which is down here around 87 to 85,000, or potentially even come down to around $80,000 to $75,000, down to the 200-day moving average. Some people might say that this is overtly bearish, but at the end of the day, this is in line with typical mid-cycle corrections for Bitcoin. So even if you're of the idea that Bitcoin is going to go to 150K or 200K and we're going to move up and to the right, these kind of corrections are very typical within crypto, right? We already saw a pretty substantial correction back here, for example, back in March of 2024, from 73,000 down here to around 49,000. It is totally within the realm of possibility to see something like this play out, right? So this isn't something that's completely far out, and it wouldn't be too shocking considering that from the relative low in September, we went from $52,000 all the way up to $108,000. For Bitcoin to double like that in such a short window of time, you can likely expect that there's going to be a correction, because multiple potential in Bitcoin is not going to be anywhere near as sexy and as exciting as it was in the past. There's no better way to put it, right? So just keep that in mind here. I'm only here to let you guys know that there may be a better buying opportunity and maybe a window of time where there's going to be some more pain before we have greener pastures. And then after that, we can evaluate, right, whether or not we're really ready to kick off continuation in price to the upside. Now, I want you also to keep in mind as well the possibility that there is a chance that we go further than that we come back down and really start to retest back into this range we were at back here most of 2024. That is not completely out of the cards, especially considering how suspended away we are from the 200-week, which has historically been a long-term accumulation range for buyers to come into the market. So I want you to just keep that in mind here. We talk a bit more about that in this month's edition of the Dash Report, which I'll talk a bit about later on. But I wanted to go ahead and talk about some of the raw numbers here, right? Maybe you don't see eye to eye on the price action, the lower highs, the rejection of the 21-day. Maybe you're seeing something else when it comes to price action. That's fair. But take a look here at the inflow data. MicroStrategy, which has really been this big buying force, they were more impactful than the ETFs were, like iBit, Fidelity, all these players. There was more inflows from one single corporation, MicroStrategy, than there were from these ETFs during this window of time, during this major uptrend. Hundreds of thousands of Bitcoin being purchased, nearly 200,000. And we can see that we've gone from weeks where MicroStrategy was buying 20, 50,000 Bitcoin on a religious basis, now going down here to 5,000, to 2,000, to 1,000. trying to kind of find pennies and, basically coins under their mattress to go out and buy Bitcoin. Of course, obviously 1,000 Bitcoin is you're going to need a lot of quarters for that. But my main point here is you're seeing this slowdown and the buy side pressure. And this is something we've echoed for the past month now, that the MicroStrategy premium is starting to weaken. It topped out back here in mid-November. And for 2 months now, that premium has just been generally declining, which means MicroStrategy doesn't have the same tenacity to go out and be able to essentially issue new IOUs or essentially new convertible notes that allow for them to raise a ton of capital to go out and buy more Bitcoin, right? We talked about that in a couple previous videos. I think you guys probably understand some of the mechanics of that, but essentially MicroStrategy had a lot of people who were interested in these new convertible notes that allowed them to essentially give their capital, let's say $1 billion to MicroStrategy, and MicroStrategy go buy $1 billion worth of Bitcoin. Essentially, the convertible notes would say either you're going to get your money back in 5 years and earn no interest, or if the MicroStrategy stock share price goes to a certain strike price, then you can convert your notes for a profit. You can either immediately sell or just hold, right? And it was this way where essentially people in the bond markets were able to make either a killing or at least they get their money back. So it was a pretty low risk kind of trade setup while everything was going good, right? So that's why they were able to raise all this capital, just for context. But we're seeing a weakness now in that because of the decline of the premium. And you're also seeing some outflows here in the IBIT ETFs, or when we see inflow, weeks, for example, it's a lot slower here. It's single-digit thousands, which I know still sounds like a lot. It is definitely in net dollar terms, it's a great amount of money. But you have to consider here that as Bitcoin is going up here, we care more about the numeric amount of Bitcoin, not the dollar value, because essentially, as much as there is going to hopefully be growing demand for Bitcoin, there's also growing sell-side pressure as you move up. And this is why, again, it matters a lot to analyze how those inflows are weakening here, if not turning into outflows on some weeks as well. So just keep that in mind, the significance and importance of that. Another way to kind of visualize those Bitcoin ETF inflows, right? We're only on the 13th here, or this was up until January 10th. So, right, at the end of the day, this has been about a week and a half considering the holidays of time where inflows could come in. But even at the end of this month, we're probably looking at a month that will probably be optimistically around 20, 25,000, much weaker than some of those prior months. And we're at a much higher suspended price than where we were when we were getting these inflows in October and November. So the appetite for sell side pressure is larger. So we need larger amounts of buy side pressure. This is a very important principle I don't see enough people talking about, and it's something you really need to keep in mind here. The bigger Bitcoin gets, the more we are going to require buy side pressure. That has been true in every bull market, but it becomes even more true and should leave us having more conservative expectations for where Bitcoin can go. And when I take a look at the liquidation heat maps here across the market, looking essentially where there's an incentive for exchanges to liquidate end users and drive price in a particular direction, there really aren't too many shorts here in the market, but there are a lot of people who are passively long here. Whether you look at Model 1 or Model 2 here on CoinGlass over the last 6 months, you'll see very clearly here that there is a bias right now to a lot of people building longs back here in August, September, and October who have not been closed out of their positions. And that means, in my opinion, that there's much more of a likelihood here, there's much more incentive for price to move lower here, especially with weakening inflows and a generally weakening sentiment here in the market. Now, if you guys are interested to get access to some of the data science models that we utilize here on the Data Dash channel, some things that we don't always cover here on the channel that we share for our exclusive members in the Dash report, I definitely recommend you guys check it out down below in the description. We've got a lot of different things that we cover in the newsletter here on this channel. Not only do we do a usually 20 to 25 page plus report covering crypto, stocks, commodities, and Forex. So it's really a whole 360-degree view and opens up a lot of new opportunities that you may miss just being in crypto. But beyond that, we have our data science models that will help to predict whether or not we are potentially reaching short-term or long-term peaks in the market, or buy the dip opportunities, bear market lows that will be able to give us the opportunity to hopefully be able to buy Bitcoin at the best available price. There are a lot of really awesome things you guys get access to. Our discussion group, the alerts group, we do exclusive market updates, and we even have a webinar coming up here on the 14th. So if you guys want to join in on that tomorrow at 10 a.m. Eastern Standard Time, you guys can sign up for the Dash report. And you can always, if you want, try it on a monthly basis, see if you like it. If you don't have to stay on long term. But if you guys do find an interest in it, you can always sign up for the annual and save 20%. It's a great way to support the channel. It's less than a cup of coffee a day. It's a great way to support all the free content we put out, but outside of that as well, to get a lot of additional juicy content and to be able to link up with some of the best minds in our community. We have hundreds of members on our Telegram group. So if you guys are interested to chat with them, feel free to sign up and consider joining. But outside of Bitcoin, we also have to talk about what's going on with altcoins, because right now altcoins are trending on. But outside of Bitcoin, we also have to talk a little bit about what's going on with altcoins. And altcoins are really treading on thin ice right now. After having a pretty substantial rally from back here in early November to early December, within about a month, having this move from around 8% dominance in the market up to 12.25%. We have since then been setting in lower highs here and have been continuing to fade down, struggling to hold support on the 21-day, facing resistance at the 200-week pocket here, which is really the last thing we want to see for altcoins. That's probably more negative than not being able to hold on the 21-day. And we are hoping, I think the bulls are hoping, to see whether or not we can actually hold in the 200-day pocket here, which we're currently trading in right now. If that doesn't happen, we're likely coming down here to the 100-month EMA, and that means another 1.4% reduction in altcoin dominance. If Bitcoin's going through another substantial correction over the next couple of weeks, next month or so, it is going to be even more brutal for the vast majority of altcoins. So my main point here is that there's a very good chance we come down here into this range. We already tested it here in June, here in August, here in November, somewhere in this range between around 8.5% all the way up here to 9.5% looks growingly likely. And that is going to mean others' market cap is going to continue to bleed. It might even go below $300 billion and really give up a lot of the gains over the past couple of weeks that we had back in early December and late November. It's just something to be prepared for. And you see it also in the large cap plays. Like, this is not just the meme coins and all the things that obviously are likely to give up some of their valuation, the AI agents and all this nonsense out there in the market. We see here ETH BTC continuing to face resistance at the 100-day time and time and time again against Bitcoin. That is not good to see. The fact that we can't even hold on the 21-day and get above these moving averages, and instead they're starting to act as resistance, is a really bad look. And it makes sense because fundamentally speaking, Ethereum, I would say outside of DeFi, really doesn't have much going for it. And a lot of its network activity has been basically scaled through a variety of L2s with their own tokens. So that takes a lot of the buy side pressure out. Outside of that as well, we see Sol as well, right? Getting above that 21-day was looking pretty good. We came down into it, not even a hope, just completely faded through here, almost back down to where it was here in December. This looks like typical distribution to me. The more you zoom out and look at this on the weekly time frame, the more you will start to see that this is just a long-term sell-side pattern here for Solana. Now, I wanted to go ahead, though, and talk a little bit outside of crypto because I think that there's an important dynamic here that you guys really should understand when I'm making this analysis here. I'm not here to be negative on crypto. I'm in no means trying to drum up fear or anything like that about the market. I'm just showcasing what price is saying, and you can take with it and do with it as you will. Some people don't see eye to eye with me, and that's totally fine. I completely respect that. I don't have everything figured out. I'm just sharing what I've learned over the last couple of years being in financial markets since back in 2011. The main thing, though, I want to emphasize is that we're seeing this not just in crypto, but we're seeing this also in the stock market right now. Equities are showcasing clear signs, and we are well overdue for a healthy correction in the market. But essentially this time around, it's looking like we might be getting something a little more heavy than the typical pullbacks like we had back in March here in 2024, or the one here in July to August of 2024. We look like we're heading for something that's going to potentially go below the 200-day moving average. The 21-day is showing it here, rejection on the price. You can see the exact kind of same price change habits here. The 21-day used to be where anytime you got close to it, usually that was the point to buy, or any dip below it usually was bought up quickly after the reclaim, prices would rally. Now we are seeing rejection, 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 time and time again on the 21-day. And you're not just seeing this in the S&P 500, you're also seeing it as well in a lot of other plays, like the NASDAQ, for example. The moving averages are not playing favor here to price. Inconsistency in the trend here, lots of gaps to be filled. The Russell 2000 small caps, which were really kind of leading the way here in early November, have now started to correct quite a substantial amount and are already at the 200-day moving average. Very good chance that this could come down to the 200 week. I'm keeping open to that, and that's going to be a pretty sizable correction in equities, let alone I have no doubt that it is going to have a knockdown effect on crypto, or vice versa. Essentially, crypto is on the risk tail end, whether we like to think of it that way or not. Some people see Bitcoin as a hedge. It is a risk on asset. It does great during optimistic periods of time. And as we've tried to describe it here, my way of viewing Bitcoin, at least from how its price has performed, is it's a money debasement hedge. It is not some inflation hedge. It is not this thing that you hold to kind of per se bet against governments at the end of the day. It really matters about whether or not the money supply is being debased. And right now the dollar is incredibly strong. It is growingly stronger week by week here. We can see here very clearly, if we just take a look here at the Dixie, for example, DXY, come up here to 109 versus 100 back here in September, right? So if this continues ticking up, it's going to put some pressure on Bitcoin. And at the end of the day here, the big thing I want you guys to just keep in mind is that corrections come from time to time. It is nothing out of the blue, nothing too wild to expect that we could see something like this, right? And it's just best to be prepared for it and to hopefully have some capital on the sidelines so you can accumulate or trade at an entry point that's much more favorable to you when you get those discount opportunities. They don't come around all the time, and they usually come when people least expect them, when everyone's so optimistic and now touting price models like Plan B of 500,000 Bitcoin. It's right around the corner. The institutions are swallowing up, MicroStrategy's buying it, but they aren't actually looking at the hard numbers, which showcase that that trend is unwinding in a very big way. Because it's fun to talk about it during the good times. It's not so fun to talk about it when things are starting to go down. That's not me trying to be negative. You guys know I was here. We've been trading meme coins. We've been, basically, we switched our opinion to more bullish back in October 2023 and started to realize that at that point a real trend was forming and that the ETFs were coming, right? We're totally open to both directions. And I'm not here to say you need to short the market. I'm just here to say, be cautious. Don't get too euphoric. Don't be fully exposed in the market. Look for those dip opportunities. And I can't guarantee anything, but I would say, let me just say through my experience throughout the years and stuff, learning the hard way, it's best to not always be overexposed and to have capital on the sidelines so you can buy when those opportunities come. It feels great. And a lot of that as well can really bring in your average entry price, even if you're DCAing, when you get those really great corrective points. So even if you're playing the long-term game, it's best to not always just blindly DCA. You can sometimes, when you see clear signs here within price, you can do smart DCA. Wait for clear signs to emerge, essentially. If you start seeing those signs where price is starting to weaken here, then you can really start stacking cash week by week here and then really go big when you get that corrective moment down below the moving averages, or really where essentially everyone is starting to think, oh my God, it's the end times. I should sell everything. That's when you should be buying. So we see clear weakness signs here in Bitcoin. We see it in altcoins. We see it in stocks. It's just something to be prepared for. And I also want to echo here again a very important point that I think is something that's a bit uncomfortable for some people to consider. But, a lot of people got really juiced up about Bitcoin's rally, but that was from 54,000 here to around 108,000. So it's basically doubling in Bitcoin's price from low to top. And look, that's cool, especially considering the time window that it went through. But to be honest, as you guys know, if you've been around Bitcoin and crypto for a while, these kind of multiple expansions are, while they're very exciting, right, they're not as exciting as they used to be. And there are a ton of assets now in stocks right now, not just altcoins, that are starting to outpace, broad narratives that are starting to outpace the performance of Bitcoin. So that's why, again, I really want to echo, if you guys are interested, to check out the Dash report, because we cover a lot of things that just aren't really relevant to cover for most people. I find that what we cover in the Dash report is for a really kind of, I think, a very dedicated group of traders and investors who want that extra edge, who want the additional opportunities, who are able to kind of step out of their comfort zone, who've maybe just been trading in crypto and altcoins and are looking to take maybe some great returns they've made, or even fresh capital, new bright eyes who are looking to really get started and play in the big leagues of trading in equities as well, and trying to find those emerging narratives similar to how we saw crypto as an emerging technology narrative back in 2016 and 2017. So I want you guys to keep that in mind here, that there are opportunities out there. There are a lot of stock segments, or I would say kind of industries or sectors, emerging market leaders that are going to be the new Googles, Metas, Amazons, Apples of the next decade. And they're going to be in sectors that you may not expect. They're these little corners that are just starting to emerge in markets. It's a really exciting time. We've been writing about this for like 2 years actively in the dashboard at a minimum. And now it's finally the time where a lot of those are really coming into fruition, where we've started to build positions and we're becoming less and less allocated to crypto and more allocated to these fast-growing sectors that have the multiple potential, that are no longer a multi-trillion-dollar market like crypto is today, but they're like crypto back in 2017, a couple $billion, if not maybe $10-20 billion as an entire market. And that's going to give them the market to scale potential to really go on to be able to 5, 10, 20x over the next couple of years. So just keep that in mind here, that multiple potential is what really matters at the end of the day. If you want to check it out, you can check out the link down below in the description. Again, it's a great way, even if you just want to support the channel, to consider signing up, guys. But that's it for today's video. I hope you all enjoyed the content we put out here today. If you did, consider dropping a like. It's a great way to support the content. Let me know as well in the comments down below what your thoughts are. If you're interested in what we talked about, have any thoughts on it as well, if you agree or disagree, totally open for that conversation. But anyways, guys, I hope you guys have a phenomenal rest of your day, and I'll see you guys right back here on the next video. Take care, everyone.